Hey guys, Matt here. So AT&T stock dropped quite drastically after earnings. Like for a value stock who's not known to be volatile, like this was a big drop after earnings today. In this video, I kind of want to talk about why. Now, to hit some of the high notes. Now, for starters, I want to say that I did not listen to the call yet. The call went on while I was at work, and the last time I checked, the recording wasn't available. But let's hit the high notes and let's go over my opinion. So as far as analyst estimates, AT&T beat on EPS and AT&T beat in revenue. So 65 cents versus 62 expected. And then we got 29.6 reported versus 29.4 expected. So as far as the estimates, AT&T beat and beat. Like, no matter what you think about this company or this stock, AT&T is financially strong. Now, I want to start things off as far as the numbers by talking about my favorite part. And returning visitors to my channel who have watched through my AT&T playlist, you probably saw this coming. Like, this right here is my favorite part of the earnings. And this right here, after seeing this made me assured that AT&T, like, it made me very confident to be an AT&T shareholder. Like, I thought the earnings were pretty good. And this is the best part. The long-term debt. This is compared to December of last year. This has been a long time coming, and it's finally happening. AT&T is bringing down their debt. Finally. 151 billion to 129.7 billion. That is massive. Like, we've been watching AT&T's debt go up after swearing to bring it down throughout 2021 and part of 2022, and they finally got this down. So that means AT&T is making do with their promises to become a slimmer company, and we can see evidence of that later on in their income statement. But so we got their assets that dropped, and that's because they pretty much sold off Warner Media, which was a huge part of their business back in December. So yeah, you see this right here. So the assets dropped, which is expected. The current liabilities dropped like a rock, which is fantastic. Non-current liabilities went up a little bit, but honestly, with the huge drop off in debt, I'm very happy to see this. Now let's take a look at their income statement. Now I'm not going to spend too much time on this part because it's not very fair to use this, because second quarter last year they had Warner Media and all that stuff. So of course the revenue is going to drop off. But I do want to bring your attention to one thing. So take a look at their total operating revenues versus last year. So you can see they dropped about 6 billion. Let's keep that in mind. Their operating income did not drop by 6 billion. Their operating income dropped maybe 1.5 billion at best. And that right there leads credence to my point, is that in AT&T's pursuit to become a leaner company, it's showing. Like, they're keeping more of their money. And I didn't agree with AT&T's decision to spin off Warner Media, but I'm very happy to see that it's bringing results. I mean, their net income, 4.5 billion versus 1.8 last year. Now, a lot of it's due to last year's mark-off from the loss from discontinued operations. But still, it's good to see. These are really good numbers to see. Now, just to be fair, cash flow did take a hit versus last year. But, last year they still had Warner Media, so some of that can be explained. We'll get into their cash flow a little later on when we talk about the bad part, which you know is coming later on. Now, in order for us to get a good gauge as far as where AT&T is as far as their parts of the business, we need to look at each individual part as opposed to the income statement itself. So let's start with this. Now, if you're on a mobile, I'm sorry, you may have to squint to see this, but I need to be able to fit all this into one screen. So AT&T Mobility, that's been their strongest part. Like, if you take a look at this versus last year, 191 million last year to 203 million this year. This quarter this year. So this is absolutely fantastic. Like, all these numbers look great. Churn is a little higher, and we'll get to that a little later when we talk about the bad part. But Mobility, they've been hitting this out of the park. As a matter of fact, their revenue was so good, well, their numbers were so good for their Mobility that they are increasing their guidance as far as Mobility for this year. Now, that is good to see. Now, the cash flow stuff, the bad part, yeah, we're going to talk about that just a little later. But as far as their Mobility, they're hitting it out of the park. Now let's take a look at the different parts of their business. Mobility, as we know, ramped up quite well. It was a good increase from last year. Their business wireline, so for their business customers. Now this right here, I think, is the most troubling part of this. Is the most troubling part of this earnings, is that they dropped from 6 billion to they dropped from 6 billion to 5.5 billion. That is a big drop off. Now, I don't have a crystal ball. I'm not a financial expert. This is probably due to the financial economic situation that we're in. We're not exactly in the best situation of all time, and maybe businesses just aren't wanting to spend as much money as they usually do, right? Consumer wireline, facing residential customers, that's going up a bit. So the operating income versus last year, not so good, despite the increase in revenue. Now, let's talk about why everyone sold their stock. So they lowered their free cash flow outlook from 16 billion to 14 billion. And what I have highlighted here are the reasons that they gave. Now, I'm going to go over each one, and I'm going to give a brief opinion on it. Or maybe not so brief. We'll see. So the first one is a 1.7 billion higher capital investment year over year. Now, that right there is it's a good reason, in my opinion, because the decision to invest more in CapEx is a deliberate one. And that means because AT&T, at least according to what they say, paying their dividend is a high priority. And this is why everyone's so sensitive about free cash flow. Paying their dividend is a high priority as far as AT&T, at least what they say. And the fact that AT&T looked at their balance sheet and their net income and stuff, and felt confident and making a 1.7 billion higher investment into making their company do better all over the long term, I think that's good news in my opinion. I think that's a win. So I think that's a good problem to have. Now the next one is not so good. An impact of approximately 1 billion due to timing of customer collections. Now I read into this, and basically customers aren't paying their bills on time. And it's not just one or two customers, but approximately $1 billion worth of it. Now, that right there is a problem. That is a problem. However, in my opinion, it seems to be more of a problem of the consumer buying power than it is, a problem with AT&T. Because we saw the consumer wireline, their operating income drop versus last year. However, I don't think that this is a long-term thing. This is probably a short-term problem. And at least I hope it's not a long-term problem. If it's a long-term problem, then we have bigger problems with AT&T. We have a problem with the economic landscape in the U.S. Now, we also got incremental success-based investment due to high subscriber growth, which is another good problem to have, in my opinion. And then we also got the business wireline operating income, which I think is a pretty big problem. Now, hopefully, like I said, the business drop-off is due to businesses not wanting to spend more money because they're making less money. Hopefully that will right itself, but we'll have to wait until the economic condition gets back to normal, and then we'll have to see if the business wireline operating income stabilizes. So as far as my opinion on these earnings, I think AT&T is headed in the right direction. As far as things that AT&T can control, I see no problem with these earnings at all. Now, there are problems, but in my opinion, I think it's due to the outside factors, and I think those are short-term problems that will right itself over time. Now let's talk about what I'm going to do with my investment. As you can see in my portfolio, AT&T is the largest position that I have as far as the current value. Now, I've said in previous videos that I don't want to invest more money into AT&T as of right now because my position is pretty much built. Like, the dividend reinvestment will take care of itself from here on out. I just don't like, as much as I like AT&T, and as much as my confidence is assured in the company, I just don't like having a single stock taking up more than 10% of my portfolio. Now, having said that, if this stock continues to drop, because how I invest is every Monday I put in $300 into a growth stock, and every Wednesday or Thursday I put in $300 into a value stock. If next Thursday AT&T stock keeps dropping, I may have to reconsider my position and start putting money back into AT&T. But anyways, take care, have a great day, and eat your vegetables.